Hi everybody, I'm James Blacklaw's JB Commercial Finance here. And what I've tended to do across the pandemic is, as most of you are aware, I've done snippet videos as we've gone along. And then once in a while I've done something a little bit kind of more formal to summarise the current position. And I felt, as I speak now, it's the 9th of March, a bit more of a slightly formal video to go through the new business recovery loan scheme, what we know so far. It feels like a bit of a crossroads situation. We've had confirmation last week about the budget that the Civils and the bounce back loan scheme plus the large Corona business loan scheme are going to come to an end at the 31st of March. There was lots of talk about them possibly extending it in the budget because of lockdown, so increased lockdown in certain sectors, but it is coming to an end, and there's going to be a new loan scheme coming out called the Business Recovery Loan Scheme. That's certainly what it's titled at the moment. So what do we know so far? So we're dealing with facts here, no speculation. If anyone wants my opinions, they can watch other videos, they can ask me, I'm more than happy to give them. But what we know so far is a new loan scheme is coming out starting on the 6th of April, initially running until the 31st of December. Obviously, as with all these things, it's subject to change. The loan's going to be from £25,001 up to £10 million. At the moment, we don't know a huge amount about the eligibility criteria. The bounce back loan scheme and the Civils loan scheme were based on turnover, percentage of turnover. We don't know yet. There's going to be a lot more emphasis on due diligence of the loans going forward here. So credit scores will be taken into consideration. There'll be credit checks done. And I would imagine there'll be a lot more assessment on affordability. A little bit of interpretation there, but certainly the initial guidelines suggest that. It's going to cover initially four main products: business loans, business overdrafts, invoice discounting, and asset finance. Term up to 6 years for loans and asset finance, and 3 years for the other two products. So very similar to the Civils loan scheme initially. Key differences: there'll be no interest only or capital repayment period at the start, so you're liable to pay the interest and capital on day one, very much in keeping with a traditional loan. And the government guarantee is going to be different as well. There'll be an 80% guarantee from the government, which is similar to Civils, but different to the bounce back loan, which is 100% guaranteed. And there will also, as with Civils, be no personal guarantees under £250,000. So a lot of that's very similar to Civils, almost a continuation of that with regard to the loan amounts, with regard to the terms, with regard to the government guarantee. The key difference, which we don't know yet, is that the due diligence that's involved in the loan, and obviously we're not 100% sure which providers are going to be providing this loan facility. So to take this from fact, as I've said, so far to a little bit of what we might expect going forward, there will be a panel of lenders who can offer this product as per the other loan products. I would imagine initially it'll look very similar. All the providers of Civils have been accredited for that through the government, through the British Business Bank. So you'd imagine they'll be fine to offer the recovery loan as well. They've got to get their systems in place, got a little bit of time to do it this time around, unlike the bounce back loan scheme. So I would imagine the business recovery loan scheme will look very similar panel wise to the Civils loans scheme and the bounce back loan scheme. Whether guys like me can be involved, we don't know as yet. I would imagine so, but we don't know. Obviously, I'll keep you up to date with that if I can be involved or not, and it'll make no difference to the information I'm putting out there. But the key thing is the due diligence. Will this run similar to the old EFG loan scheme or the small firms loan guarantee scheme, where there was a decent amount of due diligence that was required, business plans, cash flow forecasts, or will it be a little bit more like the bounce back loan, which was effectively a tick box exercise, or the Civils loan scheme, which is somewhere in the middle, where some providers needed a business plan, others were a little bit more tick box about it. We're not sure yet. So, dealing exclusive in what we know that it's still stated in stone. What we don't know will continue to evolve over the next 2-3 weeks prior to the launch of the product on the 6th of April. Hope that's been helpful. If anyone's got any questions about this scheme, any other schemes, or anyone wants to talk about Civils bounce back loan scheme before they come to an end at the end of this month, I really recommend you start getting your applications in now, because there's only 3 weeks time and that will go in a heartbeat. And don't think if you apply on the 30th of March that you're likely to actually get the money, because it'll probably be too late by then. That's the best bit of advice I can give you if you want to apply for one of these loans. Hope that's helpful. I'm James Backlaws. Like, share this. It would be most appreciated. Take care, everyone.